morning, traders. Welcome to the TMT Stock Market Strategy video for Tuesday, November 29th. Well, we did get a little bit of a pullback, and I say little. There's really nothing to write home about. However, you could see that there are some selling at these lofty levels. Remember, guys, Russell's been up 15 trading days in a row, 15 in a row, up over 14.5%. Again, that's a year and a half worth of games. Ridiculous kinds of moves that were gapped up in the morning at the opening, and pretty much that was most of your gains for the day. So where do we go from here? Well, we're starting a new month. We have usually have mutual fund inflows that come in, and actually they come in every month at the beginning of the month. So you get a day or two before and a day or two after. I think after that you're going to get some tax selling, which is going to start at the end of this week, going into next week. Now, remember, we have some risk events that are happening. We have the OPEC meeting tomorrow in Vienna, and then we have the non-farm payroll numbers. There's a couple other Fed speakers involved in between, some economic data, but those are the two big risk events that I wanted to share with you and make sure that you guys are aware of going into those trading days. Non-farm payrolls come out Friday at 8:30 Eastern time in the United States. So just be careful about what's going on, maybe getting too heavy, long, or short going into the non-farm payroll numbers. Now, as far as the Vienna meeting from OPEC and OPEC non-members about the production cuts, talks are already breaking down. They're already saying that now instead of cuts, there are freeze, and there's a few other non-OPEC members that are just kind of walking away. So I believe that even if there's a deal done, it's not going to be what was anticipated. So therefore, I could see that crude oil start to sell off. And if there is no deal at all, you'll see $40 in crude oil in a matter of minutes. So just be careful if you're trading that. It is a big event for tomorrow. And there's a lot of talks that leak during the course of the trading day. So me personally, I would stay away from crude oil at the moment and going into let the meeting come out. There'll be plenty of time to get long and or short that commodity. All right, so let's see what happens going into this week. But I do believe after we get a little bump up in equities, and we may not even get that. We had 900 million for sale on the close, and it was pretty quiet. It was a quiet day trading. Very, very light volume still, so really nothing to write home about as far as any high quality day trades, unless you're looking for a special situation. But as far as indexing, it was pretty quiet. So the volume should pick up. Even though we're going into a holiday season, tax selling is coming in. It's notorious for markets to pull back a little bit, and that's what we're looking for. And then after, when the tax selling does occur, you get that Santa Claus rally. Now, we've had a rally already, so let's see what happens going into the next couple of weeks. All right, so in front of you, you see here we have the dollar ETF, the UUP. This was our third target. Now we're coming into support. I believe that this probably will fall back into the second stage support, even if that's the case, even a gap fill. But I wouldn't count the dollar out. I think the dollar is here to stay, and I do think the dollar moves higher, which would put a lot of pressure on the multinationals. Next is going to be the GLD. Speaking of the dollar, that would obviously put pressure on a lot of the commodities. Gold, I think, is going to be a little different. I think gold is going to come in when we have rising inflation. Gold works well. And also when you have that fear trade. Now, remember, there's absolutely no fear. We talked about this yesterday. The AAI numbers come out at 49.5%, biggest read in a very long time. We have VIX at extreme complacency levels, put-call ratio ridiculously low. Now that, to me, tells me that there's a huge word of caution, because there could be a shock event that will shock the markets and move the markets in an opposite direction, meaning lower, and put a bid into gold. Now, gold reached my second target. As you can see here, I've had this here for, I'd say, at least a couple of months when we were ripping here. Now, our next target would be, and that would be the 76.8% retracement, which would probably begin that's that high of the January high going into the new year of last year. Okay, well, this year, beginning of this year. So that's what I'm really looking for. I like to see one more flush lower. And if that does happen, that's where I'll start nibbling into looking for the GLD. Now, if we fill the gap here, okay, and we start to back and fill and create a new base at this area, and some of the internals look a little bit better, that's when I'll be looking for probably a move as well. to the upside, but not yet. I think gold still looks a little sloppy, and I think that we can probably get lower prices in gold. Here's the index. These are the three longer trades that we had before the breakout here of the Donald Trump rally. So this is going to be a new support here, okay? And 219.79 is going to be a new support, and then of course right down in here, that's that 218 and a half, and then of course the 210 and a half. All right, 210 and a half, 211, and I do think that we'll get there. There's a couple of open gaps, as you can see this one here, and remember, don't have to be today, don't have to be tomorrow. Could be next month, could be 2 months from now, but we're going to get there. It'll happen. After a while, you realize, is it safe to say that oh, we're going to make new highs and we're going to start a whole nother bull market when nothing really has changed? I mean, other than of course the president, but we don't know what his full policies are. We don't know a lot of his cabinet members as of yet. So this is just an anticipation of what he said he was going to do. So I would take a step back, relax a little bit, and see where we're going to go. These are more points for the longer term investor. Next is a 60-minute. You can see we started to roll over here. Our indicators did cross over. All right, so we do have movement lower in our MACD and our RSI. Price has topped at 221.52. So the next big target, and I wanted to show this to you, is really that gap fill here. Okay, well, we've had gaps pretty much every day, but the more notable gap is going to be here, and that's going to be that 219 and a half to all the way down to 218 and a half. That's going to be that gap fill, our first target for the gap fill in spiders. Next is going to be the transports. Just wanted to show you how far away we are to the 8, and then of course the 20, and those are going to be your two downside targets for the transports, and then of course we would reevaluate it. Next is going to be the IWM. And like I said, guys, ridiculous move in the IWM. Absolutely ludicrous. It's just crazy. Keep an eye on these gap areas here. That's going to be my first target. And then, of course, this area here at 125. And then, of course, you have new gap fill areas here. Okay. This is just, crazy move. It's just ridiculous. This is what I mean that the markets are broken. I mean, you have algorithms and HFTs just continue just to probe up, and they continue to go up until there's no more offers, and then you reverse them and they go right back down again. So crazy move, absolutely crazy, and all on low volume too, no less. All right, and hopefully you guys are enjoying some of these areas, these levels. This is all on our premium side videos that we use for our subscribers. Excellent areas where where it would be a great opportunity or better risk reward to get long and or short these levels. So hopefully you guys enjoyed that video today with all the levels. And here's the Qs. Lastly, the Qs. Not doing too great, really. Not getting didn't get the big push like the Dow, the Russell, and of course the S&P. So hope that helps today, guys. Have a great day. Be careful out there. Don't forget about the Vienna meeting in OPEC. A lot of leaks will come out between today and tomorrow, and then of course non-farm payroll. So we'll see you tomorrow.